Good day, everyone. This is Raymark Villarin, and for today's educational vlog, I will be talking about the fundamentals of taxation. Key points. At the end of this discussion, you will be able to define what is taxation and its nature, analyze its purpose, identify the basis for taxation, know where taxes came from, and determine the limits of taxation. Nature of taxation. Taxation is a state power exercised through the country's legislative body. The principle of taxation states that taxes are collected to support the government in its expenses and services for public welfare. Taxation refers to the practice of a government collecting money from its citizens to pay for public services. Without taxation, there would be no public libraries or parks. Purpose: to raise revenues from all possible sources to support government expenditures and services and to promote the general well-being or protection of its citizens. Taxes also shield domestic producers by levying a much higher custom duties on imported goods. There are two types of purpose: the primary purpose and the secondary purpose. The primary purpose is to provide funds or property which to promote the general welfare of its citizen and to enable it to finance its multifarious activities. Secondary purpose of taxation is to strengthen anemic enterprises by giving tax exemptions, and also to protect local industries against foreign competition through imposition of high customs duties on imported goods. Canons of taxation. The features or attributes that a good tax system should possess are referred to as canons of taxation. In truth, tax canons are concerned with the administrative side of a tax. Fiscal adequacy. One of the characteristics of a sound tax system requires that sources of revenues must be adequate to meet government expenditures and their variations. Fiscal adequacy means that sources of revenue must be sufficient to meet government expenditures and other public needs. Administrative feasibility. The tax system should be capable of being properly and efficiently administered by the government and enforced with the least inconvenience to the taxpayer. Administrative feasibility means tax laws and regulations must be capable of being effectively enforced with the least inconvenience to the taxpayer. Theoretical justice. It is known as the ability to pay principle, and it means that the tax burden should be proportionate to the taxpayer's ability to pay. Theoretical justice means that a sound tax system must be passed on the taxpayer's ability to pay. Basis of taxation. First one is the Constitution, the fundamental law of the land. Second, statutes, laws passed by the Congress or presidential decrees. Third, Bureau of International Revenue, rules and regulations. Fourth, judicial decisions in tax cases by the Supreme Court. Fifth, provincial, city, and municipal ordinances. Sixth, observance of international agreements and administrative rulings and opinions. Objectives of taxation. Individuals who earn a considerable amount of income. Tangible and intangible properties. Transactions, consumptions, interest, imports and exports, and privileges. Situs of taxation. Situs is a Latin term for place or location. It refers to the place where taxes are to be paid. Situs of taxation literally means place of taxation. The basic rule is that the state where the subject to be taxed has a hiatus may rightfully levy and collect the tax, and the situs is necessarily in a state which has jurisdiction or which exercises dominion over the subject in question. Income tax. This is paid either in the place where the income is earned or the place of residence of the taxpayer. Income tax is a type of tax that governments impose on the income generated by businesses and individuals within their jurisdiction. Income tax is used to fund public services, pay government obligations, and provide goods for citizens. Real property tax. This is paid where the property is situated. Personal property tax. Taxes on intangible properties are paid in the place where the property is located, similar to real property tax. Business and occupation taxes. This is paid in the place where the business or occupation is located. Next is limitations of taxation. These are the limitations that are not affected by changes in the provisions of the constitutions. First, the tax revenues must only be used for public purpose. Second, there should be proper delegation of legislative power to tax. Third, government entities are exempted. Fourth, there are territorial jurisdictions. And last, there is an observance of international law. Constitutional limitations of taxations are those limitations provided in the Constitution. First, observance of due process of law. Article 3, Section 14.1 of the Constitution says that no person shall be held to answer for a criminal offense without due process of law. Second, equal protection of the law. No person shall be deprived of life, liberty, or property without due process of law, nor shall any person be denied the equal protection of the laws. That is according to Article 3, Section 1. Third, uniformity and equity rule. The rule of taxation must be uniform and equitable, and likewise progressive, and that is according to Article 6, Section 28.1. Fourth, non-imprisonment for non-payment of poll tax. No person shall be imprisoned for a debt or non-payment of a poll tax. Article 3, Section 20. Fifth, no appropriation for religious purposes. No public money or property shall be appropriated, applied, paid directly or indirectly for the use, benefit, or support of any sect, church, denomination, sectarian, institution, or system of religion. Double taxation refers to an instance when an income, a property, or a transaction was imposed with the two or more taxes by taxing authority in the same year. Double taxation is a tax principle referring to income taxes that is paid twice on the same source of income. It can occur when income is taxed at both the corporate level and personal level. Double taxation also occurs in international trade or investment when the same income is taxed in two different countries. Double taxation. Direct duplicate same income tax twice. Indirect duplicate taxes that are paid by the same individual or corporation based on two or more different taxing bases. The question of government taxing itself. The government may be taxed if it derives profit in the exercise of its proprietary capacity, and not when the revenues were gained from the exercise of governmental responsibility. Avoiding taxation. These are other concepts related to taxation in terms of avoidance or non-payment. So the first one is shifting. This is the passing on of the tax burden from one person to another. So the incidence of a tax rests on the persons whose real net income is reduced by the tax. General sales taxes are paid by business firms, but most of the cost of the tax is actually passed on to those who buy the goods that are being taxed. In other words, the tax is shifted from the business to the consumer. Capitalization. This is done by reducing the price of a taxable product or service to lower the tax that will be imposed on its consumption. Capitalization, or the tax capitalization, refers to how asset is value changed when the cash flow is changed by an increase or decrease in the tax liability for that asset. So one of the costs that must be subtracted from a future income stream is the tax assessed on that asset. Tax avoidance. It refers to the availing by the taxpayer of legally allowable means in reducing or minimizing the tax due on certain properties, items, and services. Tax evasion refers to the use by the taxpayer of illegal means in escaping, defeating, or lessening the tax due. And lastly, the tax exemption. The bestowal of immunity by the taxing authority on a taxpayer from the obligation of a tax payment. And that ends for educational vlog today. Thanks for watching!